Hello, everyone, and welcome to another exciting episode of the Counsel podcast with your host, Cory Sterling. That's me. What's up? I am very, very happy that you and I are together. Wherever you may be listening to this, I'm currently in Greece. I'm in the city of Hania on the island of Crete, having a good old time and excited to share some fun and interesting stories and love and energy and information with you today. So, as always, the promise for the show, why we're here, is that I want to help you protect and grow your wellness business with both confidence and clarity. That's what I do. I share real stories from real clients, and all of it is just to give you the confidence and clarity to make the right decisions on your entrepreneurial journey in the health and wellness field. Get ready for my little upmark intonation, which is coming as I introduce this week's episode, which is, when should I incorporate? I always lift my head when I say that. I don't know, if you're just listening to this, you can't see me lifting my head, but I'm like, when should I incorporate? And I try to get taller, and I'm already a little bit tall, so just getting taller all the same. When should I incorporate? This is a really, really important question that a lot of health and wellness entrepreneurs are going to come up against. And there are some practical considerations. There are some legal considerations. And watch out, because I'm about to say the T word. There are some tax implications as well. But don't worry, I'm going to be able to address all of this in less than 15 minutes and in a super fun and practical way. And I'm going to share a story about one of my clients that's going to illustrate everything to you. So, why does this matter? Why should you care? There is a lot at stake with your business, and deciding whether or not you should have a separate legal entity or not is going to be an important decision that at some point, likely along your entrepreneurial journey, you're going to have to make. Should it be an LLC? Should I incorporate? Am I in a partnership? Should I continue to operate as a sole proprietor? These are all of the questions that will come up. And one of the most consistent questions I've gotten across my whole career as a lawyer has been, when should I incorporate? When should I stop being a solopreneur and operating as a sole proprietor and take the big leap and go and start a company and own a company and have the company run the business? So, wow, I sort of feel like I'm telling my children that Santa Claus doesn't exist. If Santa Claus doesn't exist, it's never been proven that he doesn't exist. But the first thing that I want to say about this before I jump into the information is that it's a lot less dramatic, I think, than people think it is in their mind. I think in their mind, people get very, very excited about the idea of having their own company. And I know what it represents for a lot of people. What it really represents is, cool, I've made it. I'm now finally a company. I've done it. I'm big. I am big enough to have a company, and it is a milestone, and it's worth achieving. And I can remember one of the first clients that I had when I started my practice, one of the first things we did was incorporate for them, and they were so cute. They were so happy. They signed the papers, and they were like, they'd been in business 6 or 7 years, and they're like, yes, we finally did it. We're a company. And maybe I've just done this so much that it's a little bit less exciting for me, but it is a big step, usually symbolically, but there are legal implications. So I'm just going to quickly break down the different types of structures and entities and explain the main differences with them. I'm going to explain when you'd make a decision to incorporate a company and switch from being a sole proprietor. And then I'm going to share a quick story with you that illustrates all of these points. So the first thing to know is, when you operate a sole proprietor, you and your business are the same. So even though you have a credit card for your business, you have a bank account for your business, the assets of your business and your personal assets are the same. So if something happens, if you're a coach, if you're a trainer, and there's some sort of accident that takes place, and now the company has to pay damages, or the company is in debt, or as an example, if you're a sole proprietor and you take out a loan on behalf of the business, you personally will be liable to satisfy those debts. So that obviously there's a lot of risk that's included with that, because you're operating a business, you've got a lot of relationships, you're doing a lot of different things, and you personally are responsible for satisfying any debts or liabilities that the company may come up with. Also, from a tax perspective, you're paying everything as an individual. So whatever the personal tax rate is, whatever the amount of money that you're earning, all of that is just taken on the personal level. So it makes sense a lot of the time to incorporate a company. In Canada, there's really only one option, which is to incorporate a company. You can do it provincially or federally. And in the United States, you can register an LLC. And what this does in principle, and it doesn't do this always entirely, but for this conversation, we're just going to say that it does. When you create a separate legal entity and you incorporate, so I'm in the United States and I form an LLC, and I'm just going to make a note right now because I know everyone's like jumping out and asking about S Corp. So S Corp is a tax designation. So it has nothing to do with the legal entity area. It's a type of LLC that pays taxes differently than a standard LLC. So just to get the S Corp question out of the way, but when you create an LLC or when you incorporate in Canada, and I'm just going to use the word incorporate moving forward, that will apply to both, what it means is that the government recognizes that a new legal entity has been born, and now that legal entity operates the particular business that you're running. And this is really, really important because when you're a sole proprietor, your personal assets are going to be used to satisfy any personal liabilities or debts. But when you have a company and you've incorporated, it would be the company assets that would be used to satisfy any liabilities or debts. This also means that if the company runs out of money and has no money, and there's no money in there, and the company is liable for something, under most regular circumstances, you as an individual do not have to satisfy those debts. And this is something that's called the corporate veil or the corporate shield. And a lot of the reasons why it makes sense for some companies to incorporate a business is because they say, okay, cool, we're doing something that's pretty high risk, and because we want to, I want to protect my personal assets, and we're doing this high risk business or this high risk venture, I'm just going to incorporate so that in the event that something bad happens, someone gets sued, we lose all of our money, we owe our debtors money, whatever it is that comes up, you can use the corporate assets to satisfy. Once those are finished, there should be no personal connection to you, but there are some caveats on that. But just for today, that's the general principle that we want to understand. Also, what happens is when you create a company or you file an LLC, you have to pay, that company has to pay taxes. It's now part of the system. It's part of the whole system that operates in our society. So it has to pay taxes. It has to fulfill all sort of bureaucratic requirements. It's like an individual in society, but it's a corporation. Now, hopefully all of this makes sense. Just to basically summarize, operating as a sole proprietor, personally liable, create a company, the company can be liable to satisfy any debts, and so long as you do things mostly correctly and also including having legal documents in place, your personal assets will not be liable. So that's the first thing. Now, to answer the question of the episode, why? When is the right time to do it, and why should I do it? Now, there are a couple of considerations to be aware of when it comes to this. The first consideration is going to be how much personal assets you have. And if you have a lot of personal assets, and even if you operate a small business, it can make sense to incorporate an LLC or a company because now you're protecting your personal assets. So a very, very quick story about this. I had a client who I was working with doing an Ayurvedic healing clinic, which was really cool, Ayurvedic coaching and Ayurvedic healing clinic. And they operated as a sole proprietor. I did the documents. Everything's perfect. Awesome. I got an email from her one day. Hey, Cory, I've just got an inheritance from my rich uncle who passed away, unfortunately. Uncle Thomas, we miss you. And now I'd like to incorporate because I have significant assets. So overnight, this person went from not really having assets, okay, it doesn't make sense to incorporate, to now there being hundreds of thousands of dollars at stake. Cool. I'll incorporate a company, have everything run through the company. In the event that I get sued or something goes wrong or someone gets injured or someone dies, that's on the company. It's not on me personally. My personal assets are safe. So a lot of the times I'll also see this come up with family homes, right? I have a lot of clients who operate studios out of their personal homes or their family homes. You want to have whatever's operating be a separate legal entity so that in the event that, you have a Pilates studio in your house, someone comes over to the house, something happens, the legal relationship that someone has is with the company and not with you personally because you personally also own the house. So the first consideration when the question is, when should I incorporate? When should I create a company? If you have significant personal assets. The second is going to be based on how much money you're earning and how much tax you want to pay. So when you're a sole proprietor, you're paying personal tax. And depending on the state or the province that you live in or the country that you live in, that number will vary. But there's only one rate. It's you have a salary, you have an income, you pay a certain amount based on the amount that you earn. You can't really control that because there's nowhere else to divert the money to. So you pay that personal tax. Let's say you have a great year for business and you earn, let's say, $220,000. You're likely going to be in one of the highest tax brackets possible, and there's no way for you to protect that. So I don't know. I don't spend my time studying tax brackets. I don't know if you know that about me, but this is an important consideration to keep in mind. Conversely, when you have an LLC and when you have an S Corp, which is a type of an LLC, and you have you incorporate a company, you can pay corporate tax. And a lot of the times, the right time to open a company is when you have enough money that you don't need to pay yourself everything. So let's go back to that scenario of earning something like $220,000. The moment that you realize, okay, I only actually need $80,000 to live for my life, for my year, for rent, and for everything, which means, and I'm not going to do the math, do not even ask me 220 minus 80, I have no idea, 140, yeah, I did it. So there's $140,000 that now I can keep in the company. I don't have to take that money out. I can pay myself $80,000. The salary that I'm getting taxed at, the amount of tax that I'm paying is for the 80 on personal for what I'm paid as my salary. And then $140,000 stays in the company. And with that, I can pay only corporate tax on that $140,000. So let's say all of that money staying in there and the tax rate is 15%. Instead of me getting taxed 50% of 220, I'm getting taxed, I don't know, whatever the amount for 80,000 would be, whatever that threshold is, and then 15% on the 140. So another time, and I can share a story as well here, just a personal story for me. When I started Conscious Counsel, I think I was in my third year when my accountant told me, hey, Cory, I'm looking at your expenses, I'm looking at your lifestyle and how much you're spending, and I'm looking at how much the company is earning, and I think what we should do is put you on a fixed salary and keep the rest of the money in the company. And that's what I did, and that was a couple years ago, and I've continued doing that ever since. And the benefit is that I can choose my salary. Whatever I don't take, I keep in my company, and then I'm only paying a lower tax rate on the amount that stays in the business that I never pull out. So that's the second reason. So just to go over quickly, the first reason is for liability, personal versus corporate liability. And remember, if there's corporate liability that can't be satisfied, so long as you have the correct legal agreements and you've done everything responsibly and properly, you will be protected. Then there's a question of how much money you earn and how much tax you have to pay. So when you're a sole proprietor, you don't get to choose. When you have a corporation or an LLC, you are able to choose. And the third reason of when I should incorporate is going to be as it relates to the activities that you do and the degree of risk involved. So as an example, if you are a yin yoga teacher and you have a very, very simple, basic yin yoga practice, which is generally speaking a very low risk type of yoga, it's relaxed, it's slower, it's holding postures for a longer period of time. In the event that you have a practice like that, you won't need to incorporate because the risk is very, very low. Conversely, and this is my third and final story, I had a client who had a heli-skiing company in Whistler, British Columbia, one of my first clients. And I can tell you with them, it wasn't even a question. We start right off the bat. I said, cool, you're taking helicopters up to the top of the mountain. People are jumping out of the helicopters to go skiing. You're incorporating because the possibility of something going wrong is very, very high. So ultimately, to bring all of this together and just for it to make sense, the question, when should I incorporate, is a very, very real question. And there's going to be three factors. Before the three factors, the two things to know is you can either operate as a sole proprietor, which means you are the business, or you can have a company. And when you have the company, you personally are not liable. The company will be liable for anything that happens. The three different variables that are going to be relevant is one, do you have personal assets that need protected? If so, it makes sense to incorporate. Number 2 is how much money is your business earning and how much tax are you paying? Is it possible to have a strategic tax plan? And you do that by having a company. And then thirdly, how high risk are the activities that you're doing? Are you teaching a very, very slow yoga class, or are you operating an extreme sport company? So this is a very, very good beginner look at this question that I get asked so often. And I just want to encourage you, if you have any questions, you can just follow us on Instagram. The handle is @ConsciousCounsel. And I'll be really, really excited to support you and ask any questions. If you want to hop on a free call, just shoot me a message. We'll find a time and you can tell me the specifics of your situation, and we'll find a perfect solution for you and whatever it is that works. So I hope that you enjoyed this. I hope that this information is helpful for you. I hope that it helps bring confidence and clarity to your health and wellness business. And also remember, whatever you do, work with a lawyer who loves you. Peace.